Hello, good evening, everyone. Thank you for joining us, and thank you to Chun Ting for a very interesting discussion on what she was talking about managing finances. Well, as we are all aware, the COVID-19 pandemic has really disrupted our lives. It has taken a heavy toll on Singapore's economy. We're looking at the worst recession since our independence. We're looking at a full year GDP growth on or a minus of minus 6.5%. And of course, this will translate to a significant impact on the income of many individuals. Some will be more adversely impacted than others. So in my presentation, I'll be looking at the various relief measures, especially from the banks, and I'll also offer some tips to how to manage your money. So moving on to the next slide. Well, unprecedented times call for unprecedented measures, and I'm sure the Singapore government at the start of the year would not have imagined that that they will be working very hard towards coming up with so many supplementary budgets. We're looking at 4 here. So just to recap, the size of the 4 packages so far would have amounted to more than 100 billion Sing dollars. Okay, so we started with the unity. We started with the the unity budget, and then the solidarity, and then resilience, and then the fortitude budget. Okay, so and of course recently on Monday, just a few days ago, DPM Heng Swee Keat made an announcement to extend some of the release, more pertaining towards jobs support. May I have the next slide, please? Okay, just to recap some of the reliefs that are ongoing and some of which we have already received. If you look at the first one, cash payment. Okay, so Singaporeans aged 21 above this year would have received at least $600. And depending where you stay and so on, you or the income, or not so much where you stay, but the income that you have made last year, then you could have received more than 600. You're looking, and for parents with at least one Singaporean child, age 20 and below, you'll get additional 300. And then of course, for people who are 50 and above, the one-off passion card cash top-up of $100. Okay, so all this add up to quite a fair bit of money, and I hope you have all put it to good use. For instance, if you haven't had enough emergency funds, or you need to plug the gap somewhere, such cash payment might come in useful, okay, and give you a sort of a head start. Then of course there are also grocery vouchers, and we're talking about $400 in vouchers this year and next year. And some of you could have received, if you're a union member, a one-off relief of up to $300. And of course, on the recent Monday's announcement by DPM Heng Swee Keat, he has extended the COVID-19 support grant. And this grant revolves around $800 per month for those who have lost their jobs. And he has extended this grant all the way till end of this year. Okay, so for those who need it, you can read up more about the details of how to apply for it. And then there's temporary relief fund, one-time assistance of $500. Now, of course, there's Skills Future credit top-up of $500, which we should receive in October for those who are age 21. Those are older, between 40 to 60, they should get another $500. So if you're an older person, you might get up to $1,000 this year. And I also haven't spent my previous Skills Future credit top-up that I received a few years ago. That's another $500. So I will altogether have about $1,500 this year. And then there's this other scheme called the Self-Employed Income Relief Scheme. So this is the one where self-employed persons, people in the gig economy, freelancers and all that, may receive payouts of $3,000 each in certain months, and that will total about $9,000 if they are eligible for it. Then there's also the Enhanced Workfare Special Payment. The Monday that just passed, an announcement was also made by DPM Heng Swee Keat that this one-off cash payout of $3,000 will be dispersed in October, and he has also, or rather, the government has widened the eligibility criteria. So more people may qualify for this one-off cash payout of $3,000. So you need not be, you can actually qualify for it even if you didn't receive workfare last year. Okay. Yeah, so this is another set of temporary relief measures, and the government has said that they will offer a 1-year freeze on government fees and charges from this year April till March next year. And there's also this student loan relief. So it's a 1-year suspension of loan repayment and interest charges from this year June till next year May. So it'll be applicable to all graduates who have taken a loan for their tertiary education. And then HDB mortgage arrears relief, 3 months suspension of late payment charges. Yeah. So the next slide will show you that these are what the banks are doing. Under the COVID-19 financial reliefs, the banks have been offering this deferment of loans to their customers, and of course this will apply to cash-strapped borrowers. I mean, we understand that many people are going through a tough time, so if you do need such reliefs, find out more about such the conditions that, and check whether you're eligible for it. If you're not, then of course you can still talk to the banks to help you to restructure your debt. So for this, for other loan deferments, the reliefs will mean that all applications will be assessed on a case-by-case basis, and it's subject, of course, to each bank's internal credit assessment. And the good thing is that these deferments, they will not be subject to total debt servicing ratio or the mortgage servicing ratio requirements. Because usually these two are the requirements that will be used to assess whether you're eligible for the loans, but they will not. But if you're applying for deferment, they will not use these two ratios to assess your application. And as I said, if you do not qualify for the loan deferment package, you can still talk to your bank and check out on what other suitable repayment plans they can offer to you. For the next slide, I'll give you, we'll drill more into what is a home loan deferment. Okay, so for this is for individuals who find difficulty in paying their home loan, and they wish to defer either their principal payments, their interest payments, or they can defer both principal plus interest. And they can defer all the way till end of this year. Okay, so what happens when you're deferring your home loan? When you're in that situation and you apply and you're successful, what it means is that no interest will be charged on the deferred interest payment, but interest will accrue on the outstanding principal amount. And do note that you will incur a higher interest amount over the loan tenure, because since there's no reduction in principal amount during the deferment period, overall, if you defer your principal and interest payment, you can still pay your installments over the same loan tenure, but the installment amount will go up. Okay, and I'll show you an example to explain that. So another criteria to be eligible for this is that the applicant's account must not have been overdue for more than 90 days when applying for this relief. If your account is already overdue for more than 90 days, then the banks will put you on another loan restructuring scheme. Okay, and do understand that no late payment interest will be charged during your deferment, and it is also good to note that this deferment will have no impact on your credit bureau records. Okay, so the next slide will show you the illustration. So here we're giving an example of, say, Mr. Tan, who applied for a home loan payment relief for his home loan, and he applied on the 6th of April. So the terms of his home loan is outstanding principal amount of 225,000. The mortgage rate, interest rate is 2%, and he successfully got it deferred between May to December. So we're talking about 8 months. Okay, then his outstanding loan period is 22 years, and the current installment amount is $1,055. So if you look at the next slide, it will show that that his principal amount remains unchanged at 225,000. Okay, but there is accrued interest over these 8 months when he's deferring his home loan. So the accrued interest is calculated at $375 every month. Okay, so this accrued interest is on the outstanding principal amount. And then because of that, the monthly installment now goes up. Instead of 1055, it will be 1095 when he starts his repayment in January next year. Okay, so what happens is in January next year, his 1095 will go towards paying the accrued interest first. So the accrued interest, you can see that he has built up over the 8 months is $3,000. So in January, his 1095 will go towards paying part of that 3,000, and then over about 3 months, 3,000 would have been paid off, right? So then he will then go towards paying the principal plus interest as per normal, just as it's on a higher 1095 monthly installment. For this example, we are assuming that Mr. Tan deferred both his principal and interest, and his loan tenure remains the same. Okay, it didn't go up, but his monthly installment has gone up. Okay, if you wish to do one and not the other, as in pay principal but keep on pay principal but don't pay interest, or pay interest but defer principal, you can talk to your bank about it and ask them to work up for you the exact sums and how and whether it might mean extending your loan tenure or not. So this is something that I will encourage you to talk to your banks about. Okay, the next slide will show some other reliefs that you can apply for if you really need them. So this is with regards to unsecured debt. So at the bottom of the slide, I've indicated there examples of unsecured debt. So we're talking about outstanding credit card balances, personal credit line, and so on. So if you have suffered a loss of 25% or more of your monthly income after February this year, you can apply to convert your unsecured balances into a term loan, okay? So what happens when you convert it to a term loan, you will have a reduced interest rate of up to 8%, and the tenure is up to 5 years. And the criteria for eligibility to doing this is, besides your loss of 25% or more in your monthly income, is that you would be between 30 to 90 days past due on your existing unsecured debt at your application date. Okay, so if you're more than past 90 days, then there may be other programs for you in terms of how you want to repay back your unsecured loan. So again, talk to your bank about it. Yes. Then the next slide will show you that if you wish to refinance or reprice your investment properties, you can do so if you're out of your lock-in period. You can and like the home loans requirements, it will not be subject to total debt servicing ratio nor the MSR. Okay. So the next slide, we will look at some other options for payment deferments. So we have commercial, industrial, property loans, renovation loans, and so on. For each of the different loans, there are different deferments that you can do. So like commercial, industrial, property loans, you can defer the principal amount, interest amount, or both, something like the home loan. Renovation loans, you need to defer both principal and interest amounts. Education or study loans, you can defer principal and interest. And then for motor vehicle, it would be a deferment, but on a case-by-case basis. Then there's this thing called this debt consolidation plan. So what is a debt consolidation plan? It's actually a debt management. It's actually a plan to help you restructure your loan and help you to pay off, okay, at a more comfortable pace. So imagine if you have a loan with various banks. Let's say you come to Bank A can help you apply for a DCP, and this bank will help consolidate all your different loans from the different banks into one loan. Okay, so you only need to worry about this one loan with this bank because it's all consolidated, and it will also offer you a lower rate. Because let's say if your credit card, interest rate is like 25% per year, this DCP will offer you definitely a significantly lower rate. So it will help you to manage your loan better. So under the payment deferment relief, during such a difficult time, the banks are saying that, well, if you need help to extend your DCP loan tenure, we can help you extend it by up to 5 years. Okay. So yeah, then there's also SME loans where if you're SME and you need to defer your loan, we're looking at deferring principal payments, and you can also look at extending your loan tenure. But you need to continue to pay interest, okay, in this case. Right. So as you can see, there are many different loan deferment packages or measures out there. In terms of insurance premiums, there are also reliefs available. So if you have your premiums due between 1st April and 30th September this year, you can look at deferring your premium payment by up to 6 months while still maintaining your coverage. Okay. In terms of criteria as to how to apply for it, it differs from insurer to insurer. So it's good if you can approach your insurer if you need such a relief to defer your premiums. At this point, I think it would be good to let you know that in your insurance plans, for most of your plans, there are other options there anyway that you can consider before thinking of deferring your premium payment. So things like automatic loan, automatic premium loan, APL, or converting into a paid up policy. These are the different options you can look at depending on the cash values that have been built up in your plan. So without having to go for this deferring of premium payment, you can actually consider using these options first, but talk to your insurance agent or your insurer to see what works well for you. Okay. Then if you have if you own property and vehicle insurance, that's under the umbrella of general insurance, and you also need to defer, you can also talk to your insurer about it and see whether you need to apply for an installment plan, because these plans, general insurance plans, are normally on an annual basis. So, but if you want to convert it to an installment payment, you can talk to your insurer about that. So the next slide will show you a report card of the number of successful applications for these reliefs that I have mentioned in the last 5 to 10 minutes. In terms of mortgage loans, we're looking at more than 34,000 successful applications for such loans. And the amount is not small. We're talking about $15 billion, or 10% of total mortgage loan value. Okay, then moving on to the right, more than 6,200 applications for outstanding credit card and unsecured debt and converting it to term loans. That's 6,200. And then in terms of okay, then going down just on the loan side, back to the left column, we're looking at more than 3,200 motor vehicle loans and hire purchase agreements. They have applied for deferment as well. And of course, more than 2,100 renovation and education loans, and more than 5,300 SME secured loans. Under the insurance side, quite a substantial amount as well, more than 25,000 life and health insurance policies that have asked for deferment of their insurance premiums. And then almost 600 individual general insurance policies, for example, vehicle insurance. So that's as at mid-July, a report card of the number of applications that have succeeded in applying for these relief measures. I will now touch on what are some of the tips that you can use to boost your financial health. And I'll start off with managing debts, because I've been talking about reliefs, and these reliefs are meant to defer your payment for your loans or your insurance premiums or for your unsecured debt and so on. So I will encourage you to defer repayments of these bills that I've mentioned only when you need to, because for some of them, like the housing loan, it doesn't mean that for some of them, like the housing loan, I mean, all these repayments is actually not a waiver. In the sense you're sort of kicking the can down the road. Eventually, you still have to pay them. You're just not paying them for this period, but you still have to pay them when the repayment period starts. And for home loan, for instance, the interest will still continue to accrue on the deferred principal. So your monthly installment will go up eventually, after your deferment. So you really have to work out your sums and ask if you really need this relief. Okay, so only go for the relief if you need it, because it means you have to pay more later on. So if you're really in dire straits and you really need it, then go for it. And even if you have gone for it, please resume your payments early if you can. You don't really have to wait till, say, you're on a home loan deferment. You don't have to wait till end December to resume payments if you're in a better position. Say you've lost your job, you found your job now, then try to resume your repayments early. So once your cash flow improve, resume your payments so that you can reduce, you can help reduce the eventual installment amount. And if you're unable to resume payments, then when the deferment period ends, let's say right now you are on a home loan deferment, and December is coming soon, and you know that your your cash flow is very tight and you will continue to be tight for the next few months, then please talk to your bank early. Talk to them early so that they will also know and be given the alert that you're probably unable to resume your payments when the deferment period ends, and they can help you to do something with your loan and help you manage your loans better. Because we're all in this together, we want to be able to help one another and help you, especially when you're in such a tight situation. Okay. So the other thing you can do about managing debt is to review how you can increase your cash flows. And of course, one way of doing that is to lower your discretionary spend. And as Chun Ting has mentioned, because of COVID, because of circuit breaker period and so on, we could have inculcated a more savings habit. During this period of time, there are certain things that we couldn't do. We couldn't go out, go to the movies, or go to a watering hole with our friends, and no restaurant dining and so on. We could have inculcated a more savings habit and being able to defer gratification. And these are all good habits that we should hold on to and try to cultivate and build up and become part and parcel of our lifestyle even after COVID. Yeah. Another way of lowering your savings, lowering or increasing your savings is to look at refinancing of your home loans. Okay, refinancing or repricing your home loans, because right now we're in a low interest rate environment, so it's good to look at how you can reprice your home loans and move on from a higher interest rate loan to a lower interest rate loan and enjoy some saving, especially if you're not in the lock-in period. Okay, then of course, if you have debts and so on, prioritize paying off your unsecured debts, because these debts normally come with higher interest rates, okay, like your credit cards and your personal loans and so on. And then of course, pare down your debts. Earlier on, I mentioned about the debt consolidation plan, DCP, which is offered by the banks. The debt management plan will be offered by the Credit Counselling Singapore, which the next speaker will be I'm sure she'll be elaborating more about that. Okay, so you can look at, if you have a significant amount of debt, don't allow it to snowball and grow. You please talk to the banks or CCS to manage your debt better. Okay, then the next slide, I will these are just some of the other tips, some of which have already been mentioned by Chun Ting from Money Owl, to help you manage your financial health better. Right. So Chun Ting has gone on quite a good length about how to budget and so on. So I will reinforce what she has said and encourage you to really monitor your cash flows now. And it's so important to set aside adequate emergency cash. We have seen, and the news has been reporting, how many Singaporeans lack emergency cash. Less than 3 months, less than 1 month of emergency cash. This is all not a good state of financial health. Okay, when you don't have enough emergency cash, you will not have a peace of mind. You might be forced to liquidate your long-term investments, because you need cash. So you liquidate it, and worse still is liquidated at the wrong price, because it might be liquidated at the wrong price and at the wrong time. So it's good to look at if you have received cash payments and all that from the government, look at how it can help you to boost up some of your emergency cash and so on. Okay. And then evaluating your insurance and protection gaps. How to do that is to look at your needs, your family needs, number of dependents you have, are you the breadwinner, and decide how much of insurance you require, how long do you need this insurance, and of course the suitability of the insurance plans. Okay, so like what Chun Ting said, it is always prudent to make sure that you have a good budget, you have set up a good realistic budget, set aside your emergency cash of 3 to 6 months, and then make sure that you have covered at least the basic insurance needs. And most of these basic insurance needs would be your health insurance, okay, health insurance, critical illness. And then when you have positive cash flows, then you go for your investments, making your money work harder for you. And there are different approaches to investing. So dollar cost averaging is one way of doing it, so that you regularly invest, but in a small sum, or a fixed sum each time you invest on a regular period, regularly over a long-term period. So over time, you lower your cost of investing, your average cost of investing. the cost of investing is very important these days, especially because we're living in a very volatile environment. So costs will eat into your investment gains. And of course, if you there's also a plethora of instruments out there, and we have seen the emergence of robo-advisors, and this is where, if you do not have the time to monitor the market, and if you're not that well versed with investing, then you can look at robo-advisors to help you, depending on your risk profile, come up with a diversified portfolio and help you stay invested throughout this period and for the long term. Okay, upgrading your skill sets. So I mentioned earlier that I haven't used my skill set credit top up, but I have used up some. But I have gone for certain courses myself, especially the Institute of Banking Finance funded ones, because I realized that some courses are actually funded up to even 95% by Institute of Banking and Finance, and because I work in the bank, I managed to apply for it. So I'm also upgrading my skill set, be more flexible in your skill set, so you're able to find new income opportunities. And it's very real these days, because we never know when we might lose our income, whether it is through a retrenchment, a pay cut, or a job loss altogether because the company had to be one up. So upgrading our skill sets is really so important. Then another aspect of boosting your financial health is to look at government schemes. And of course, here I will always encourage CPF members to look at topping up your special and retirement accounts to make use of the attractive interest rates there to grow your retirement savings. Okay, not just yours, but that of your loved ones as well. And I've written here a scheme called the Matched Retirement Savings Scheme, and this scheme will be available next year. It was also, I think it was announced during budget this year that it will be available next year. So if you look at the next slide, it gives you a little bit more detail of the scheme. So basically what happened is, of course, you must be eligible for it. Okay? It's meant for CPF members who have low retirement savings. And by low, we're looking at less than the prevailing basic retirement sum. This year, the prevailing basic retirement sum this year is 90,500. And and the person will be aged between 55 to 70. So what it's saying is that if you contribute to this person's retirement account $1, the government will also match $1. Okay, up to an annual cap of $600 for 5 years, between next year all the way till 2025. Okay, so maximum what you can get from the government in terms of matched savings would be $3,000. Okay, over 5 years you get $3,000 for this person that you're contributing to, or if you can contribute to yourself. Okay. So this is a good scheme. If you know of someone who needs help, you can look into applying for this scheme. Right. Okay. So just to round out what I've spoken, because planning for your financial, you've got to plan it in a holistic manner. Financial planning is not just rushing out to go and buy the next sexy stock. You really have to look at your entire aspects of your financial health. So part of it is also to set up a sound estate plan. And there has been more inquiries from people about how to do wills and CPF nomination this period. Also because COVID, you've seen the number of deaths that's happening in Singapore, not so much in Singapore, but around the world. And suddenly it has brought to home that certain matters have to be nicely tidied up. So a sound estate plan will also help you to decipher whether you have whether you've identified certain gaps and so on, and make sure that whatever you want to leave behind or for your loved ones is properly written out and will be nicely distributed or dealt with when you're no longer around, or if you're mentally incapacitated. So the usual tools will be setting a will, doing your CPF nomination, which is easy these days because it's online, and then you have a lasting power attorney. And bear in mind that the admin fee for lasting power attorney has been extended. The waiver for this fee extended to March next year. Then of course trust if you have more complex assets. Then I encourage you to look at the use of digital advisory tools to help you. So in my time when I was planning my own financial plan, I remember 20 years ago I've been relying on spreadsheets and so on, but now there are a lot of digital tools around. So even a tool like from DBS, the NAV Planner, you can look at how it can help you to budget, identify the different aspects and work out the net worth for you automatically. And once you input the necessary details, look at your insurance gaps, help you to decipher what investments you need, plus give you customized tips, and also help you in retirement planning. So these are tools that can help you. And then of course I will encourage you, always empower yourself and know how. Okay, so doing is one thing, knowing what to do is another. So during this period of time, and on a continual basis, please empower yourself by reading up, attending such online seminars, and talking to money experts as to how you can continue to boost your financial health. So by doing so, I wish that everyone will be financially well prepared to seize opportunities and to achieve financial wellness through the years. Thank you very much.